Good morning, this is Mayor Valensky with Driving Markets. So will inflation rise in 2025? The probability is it will tick up. It's already ticking up in the US, ticking up in the UK, and also in Europe. Australia's just had a move up to inflation up to around about 4.3%. So now the Reserve Bank of Australia is thinking of raising rates down under Australia. So rates are going to pick up irrespective of whether Trump's in office or any of the policies that he is going to enact. Why is inflation moving up? Well, if you look at the bond market is the absolute foundation to financial markets, more than the stock market, more than any other market. It is the credit market, or the debt market is often called, is the bond market, is the measure as how they see interest rates and how they see inflation moving forward. And if you look at the yields, especially on the 10-year US Treasury, it's moving up. Why would the yield move up on the 10-year US Treasury? Because the US bond dealers, the market makers, are foreseeing that there will be a tick up in inflation on the back of rising costs, rising housing. But this is where you've got to keep an eye on. If Trump is successful in deporting 15 to 20 million illegal migrants from the US, then you could have a vacancy rate within the real estate sector that would flourish, and that would cause potentially rents and property prices to fall. And if rents and property prices fall, then accommodation factor within the inflation numbers also is impacted, and therefore inflation would fall. But the cost of goods, the cost of transport, the cost of insurance, travel insurance and household insurance and car insurance in some areas in the States are uninsurable, which now could change with Trump and his new approach to law and order and illegals, and getting a more conservative approach to running the US could bring insurance premiums down if there is a police enforcement of the law within the US. But inflation is ticking up, or likely to tick up, on producer prices, on transport, and also the cost of production overall. So the bond market is seeing that, and therefore they've pushed the yields up on the 10-year US Treasury bonds, which are running at around about the 4.42 level. That's quite high, and anything above 4 is going to restrict stock market growth. Conversely, if the bonds rise too much, then you could see a fall in prices or in stocks and shares, and market fall, due to the fact that there will be a move to go and get a higher level of return on your money through bonds. As far as the UK is concerned, UK growth could benefit from a Trump administration with global growth, even though Keir Starmer and David Lammy, the Foreign Secretary, Keir Starmer, the Prime Minister, have spoken in a derogatory and defamatory fashion regarding Trump. Prior to him becoming president, all of a sudden they've retracted and said, no, we got on well, we had dinner together, etc. But that's another topic we can look forward to speaking about next week. That's it for now. This is Mayor Valensky with Driving Markets. Keep an eye on bond prices. Inflation may move up. If you want to share, subscribe, follow, with pleasure. We also run mentorship programs. Catch you later. Have a great day. All the best.